I mean, let's face it, IRS audits are completely miserable, but how does the IRS actually choose who they get to audit? If you want to reduce your chances of being audited, this is the video for you. You're not going to want to miss it. Without further ado, let's dive in. First thing that you need to know about the IRS's audit selection process is something called the Discriminant function system, which is commonly referred to as DIF. DIF is a computer system that the IRS uses to scan large number of tax returns. This system relies on algorithms to identify tax returns that will be more likely for a statistical perspective to contain errors, discrepancies, or fraud. The system gives each tax return a score. The higher the score, the more likely the IRS will audit the person who filed the tax return. The IRS first started using DIF in 1969. However, it has refined the system over the years, and it still uses it as its primary statistical method for selecting who is being audited. There are many different things that you can do to be red flags to the DIF system that could potentially lead to a high DIF score. For example, all of the following things that I'm about to tell you would be red flags and result in a higher DIF score. Having high income. Underreported income. Reported income doesn't match income reported from third parties. Cash-heavy businesses. Disproportionate business expenses relative to income. Unusual deductions. Incorrect filing status. Foreign bank accounts and assets missing or incomplete information. Incorrect social security numbers, and guys, there's much more. So as you can see, there are many different things that could potentially lead to a higher chance of being audited by the IRS. But you have to keep in mind that the IRS usually only audits less than 1% of all tax returns per year. But even if you don't have any of the red flags I just mentioned, you could still potentially get audited. And this is because the IRS does choose a number of certain tax returns to audit randomly each year as well. So let's talk about how the IRS is using AI. With the rise of AI in the past years, you might be wondering if the IRS is already using it. The answer is yes. The IRS has started to use AI to assist with audit selection. In 2022, the Inflation Reduction Act that passed during the Biden presidency gave the IRS an additional $80 billion in funding. The former IRS Commissioner, Danny Werfel, has said publicly that the IRS is using funding from the Inflation Reduction Act to increase its use of artificial intelligence. There are many different ways that the IRS is starting to use AI. Some of these are actually helpful, such as deploying chatbots to help answer basic taxpayer questions. These chatbots were capable of answering questions in both English and Spanish last year. Since they were deployed in 2022, they have helped save millions of taxpayers to avoid having to wait in the IRS phone call line to get questions answered. And they've set up hundreds of millions of dollars of payment agreements via this route as well. I think very few people would disagree that shorter wait times when contacting the IRS and higher levels of efficiency are a good thing. However, the IRS is not just using AI to increase its communication efficiency, it's now using it to increase its auditing process. For example, one of the ways that the IRS is now using AI is to predict whether or not an audit of a particular taxpayer is likely to result in changes to tax liability or penalties. So now the IRS not only knows which taxpayers are more likely to have irregularities on their tax returns, but it also knows which taxpayers it is more likely to get more money from when they audit them. This means that AI is helping the IRS to be significantly more effective in winning IRS audits. This is good news for the IRS, but it's bad news for anyone who doesn't want to lose an IRS audit. Former IRS Commissioner Danny Werfel referred to the AI as being like night vision goggles that will help the IRS to spot issues with the most complicated, largest taxpayers. AI also helps to augment the discriminant function system. This is because it is capable of analyzing enormous volumes of data. AI can consider a wide array of factors and data points, allowing for more accurate and targeted audits rather than purely statistical methods. In addition, AI is capable of helping the IRS to better identify fraudulent tax returns through sophisticated fraud detection methods. This is another pro of the IRS using AI, and after all, no one wants to have their identity stolen or a scammer file a false return to steal somebody's tax refund. But what are the problems with the IRS using AI? Although the IRS is still in the early stages of using modern AI to help with the auditing process, there are a number of key issues that have already popped up with using this technology. One of them is that the IRS has not fully disclosed all of the ways that it is using AI. And this is because it doesn't want people to figure out exactly what it is doing, because that will make it easier for tax cheats to learn how to evade detection by the IRS. There are also concerns that certain AI programs that use the IRS could have racial bias that results in one racial group getting audited at a significantly higher rate than other racial groups. In fact, Stanford University's Institute of Economic Policy Research found that African American taxpayers who claim the earned income tax credit are 3 to 5 times more likely to be audited by the IRS than non-African American taxpayers due to the algorithms it used for audit selections. Obviously, if artificial intelligence used by the IRS is targeting people by race, this could be a huge problem. I mean, just think about it. Would you like the IRS to give you a 3 to 5 times higher chance of being audited just because of your race or color of your skin? Probably not. The issue was so significant that the former IRS Commissioner Danny Werfel commented on the racial bias discovery by promising to remain laser focused on fixing it. Danny Werfel is now out of office, and many people are worried that the issues with the racial bias will continue as the IRS tests out more and more AI programs to assist with the auditing process. So this could potentially lead to bigger issues down the line if the IRS does not figure out how to integrate all of its new AI programs into a completely race-neutral fashion. One other thing that concerns some people about the IRS's increasing use of AI is how it will use it in regard to social media. There are some reports that the IRS will start to use AI more and more to scan people's social media accounts to look for information that is relevant to the tax returns. Government tax authorities have already used social media as evidence in tax cases. One famous example of this is famous singer Shakira. She was charged with tax fraud in 2018. She claimed that she was a resident of the Bahamas during 2012 to 2014, a nation without income taxes. However, social media was used to help prove that she was actually living in Spain during these years while she was dating Spanish soccer player Gerard Piqué. Now, Spanish government also interviewed Shakira's neighbors, hairdressers, and used her medical records and payments to prove she lived in Spain for more than 183 days during 2012 through 2014. Shakira ended up settling with the Spanish government and wrote a check for a couple $1 million to avoid going to prison for tax fraud. But you guys, it's possible that the IRS will start using AI to scan people's public social media accounts much more thoroughly to look for discrepancies such as the ones that we saw and appeared with Shakira's tax returns. But anyone watching this video should be aware that the IRS might start looking a lot more closely at social media accounts in general. So if you're out there buying yachts, buying Lamborghinis, flexing a little bit on Instagram while claiming you don't have any income, or if you claim you live in one country and your social media says otherwise, just be aware that the IRS could be a lot more likely to notice this kind of behavior and use it against you in tax case. But the bottom line is that the IRS is getting a lot more sophisticated when it comes to audit selection. Not only has it improved its old systems, which already worked pretty well, but it's also starting to use powerful new AI technology a variety of ways. The integration of AI will make the IRS more sophisticated, more efficient, and more informed. You need to know this. For this reason, it is more important than ever to make sure that you work with a great tax strategy firm that can help you implement tax strategies correctly. Now, let's get to a question from one of my subscribers. As always, I promise that I'm going to answer a question from one of my subscribers. Here it is. This question that was asked by Rizalyn Watskins on my How to Reduce Your Taxes to Zero video. If you haven't seen that one yet, please make sure you check it out. The question was, "Hi, Mr. K, how will we get credit for solar?" Okay, so when you invest money into solar, the government provides a 30% tax credit relative to your investment amount. So if I spend $100,000 on placing solar on top of my house, I'm gonna receive a $30,000 federal tax credit on my tax returns. This is not just a tax deduction, this is a federal tax credit. What does that mean? That means if Karlton Dennis owes $50,000 in taxes, a $30,000 credit literally wipes out the $50K, and now I only owe $20,000 in federal taxes. That, my friend, is a lot better than a $30,000 tax deduction, because a tax credit is dollar for dollar. A deduction just reduces your taxable income. Make sure you stay on my channel so you can continue to learn. I'm here for you. I'll see you on the next video. Cheers.